Good morning, everybody. This is Rudy coming at you live from Palm Beach in Florida. It is Sunday. It is December the 18th. Over the past few days or weeks or so, I've made a few videos on Petrobras, which of course is one of my new favorites. I'm not allowed to have favorites, neither are you. But anyway, the mere fact that I'm making videos on Petrobras means it's one of my favorites. Three of the stocks that I've been adding positions to over the past week include Devon Energy, Petrobras, and Blackstone Minerals. But as you know, because you call me Mr. Oxy affectionately, I hope, I've also made a few million videos on Occidental Petroleum. So I thought, somewhere along the line, these two can probably converge, and we can sort of spend a bit of time getting ready to rumble, and let's compare the battle of the two giants here. So Petrobras versus Occidental Petroleum. There can only be one winner. And what I thought I would do is take a few minutes and compare them side by side or one above the other and see where they land. I'll tell you what my favorite is, not necessarily my winner, but my favorite. And then you can tell me what yours is. But so why don't we get into this and compare them? So side by side. You can buy Petrobras for about $10. You can buy Occidental for about $60. Petrobras is a $60 billion company. Occidental Petroleum is a $60 billion company. Petrobras has a PE ratio of less than 2, which means it's super cheap. And Occidental is super cheap as well with a PE ratio of 5. Petrobras is sitting right at its 52-week low. Occidental is sitting just left of its 52-week high. Petrobras is about 22% owned by institutions and a short interest of about 3%, while Occidental is about 77% owned by Warren Buffett. Sorry, I'm just kidding, by Berkshire Hathaway and a couple of other institutional investors, but mostly Berkshire Hathaway, and it has short interest of 6% of the current outstanding float. So now when you look at the sort of two of them side by side, you have two $60 billion companies. One you can buy for about $10, the other one you can buy for about $60. Remember that the price of the actual stock does not indicate the actual price per share because it depends how many shares are outstanding. And you can see that the difference here is Petrobras has about 6.5 billion shares outstanding, while Oxy only has about 1 billion shares outstanding. So there's a 6 times multiple in place in terms of number of shares. So you can immediately multiply at least that number above, the $9 by 6, which means they're both $60 stocks if they had the same number of shares outstanding and they both have a market cap of about $60 billion. Fair? All good? The market cap, by the way, for those of you who don't know, is the number of shares outstanding multiplied by the share price. So when you look at two stocks and you say, why is Occidental so expensive at $60 and Petrobras so cheap at $9, they are actually approximately the same, price the same, right? So you take $9 times 6, and that's the price of Petrobras, and you take $62 times 1, and then you have your price of around $60. So they both have a market cap and a share value that is approximately the same, even though the share price is dramatically different. For me, as a US tax person, Petrobras is an ADR, and because it's an ADR, which means an American depository receipt, I have a small fee that I have to pay for ADRs, whereas Occidental is an equity that I can own outright, and I have no fee when I purchase Occidental common stock. Right at the bottom of the screen here, you can see Petrobras is an emerging markets integrated company, obviously because it's from Brazil, while Occidental is a US oil integrated company. The technicals show us the 20-day raw stochastic for the two stocks. If it's below 20, it's probably been oversold. So both of them have been oversold. Occidental, in fact, more so than Petrobras, based on the 20-day raw stochastic. Just for what it's worth and for your interest, if the 20-day raw stochastic is above 80, it typically means it's been overbought. They're very, very far away, both of them, from being overbought. The analyst opinions have changed a little. You can see sort of a month ago, The analysts were saying 88% sell on Petrobras and 88% buy on Occidental. Today, they're both sells. The only difference is 100% of analysts are saying sell, and 24% of analysts are saying sell Occidental. This is not absolutely strictly correct or true. This is just based on the technicals, based on bar charts. When we look at the performance over the past 6 months, if you're a day trader, then my channel is probably not for you, and you should find yourself someone else to listen to and to watch. But if you're long in these positions and you intend to stay long over a time period of perhaps, I don't know, 3 to 5 years, whatever matches your investment thesis and narrative and requirements. But if you look at it over a 6-month period, which is interesting, you can see Petrobras has taken a dive, down 22%, while Occidental's up only 10%. Why only 10%? Well, you know, over the past 2 years or so, we are up 3, 4, 500%, depending on what your cost basis is. So only 10% over the past 6 months means that Occidental has pulled back quite sharply, especially over the past few weeks. Look at this one, the market cap. So the market cap, as I mentioned on the previous slide, is about the same, right? They're both $60 billion companies, approximately. But look at the annual sales. Petrobras is doing sales of $84 billion per year. That's billion with a B. Occidental, 26 billion with a B. So Occidental is generating approximately half of its market cap in sales, while Petrobras is generating more than its market cap in total annual sales. That's quite an impressive number. The tip ranks analysts have Petrobras as 7, so in other words, slightly favorable, and they have Oxy as an outperform, 10. So one needs to be a little bit cautious here because there is sometimes a herd effect. Sometimes when a stock is going up, like Oxy, all the analysts jump in and they say buy, 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 and they're trying to ride that wave, hoping that it will just keep going up. And I'm not saying that they don't do any due diligence or any smart calculations like discounted cash flows and things like that. I'm just saying there's a herd effect, right? The same thing happens when you try to catch the falling knife and something's going down. Everybody wants to jump in and get the cheap stock, and it just keeps going down, 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 down. I saw an interesting little video clip just a couple of days ago from Peter Lynch, where he was describing his Magellan stockholding of Taco Bell before Taco Bell was acquired by Pepsi. And he said that he bought Taco Bell for $7, watched it go down all the way to $1 per share. And eventually it was acquired by PepsiCo for $42 or something per share. You know, so sometimes you're going to catch that falling knife on the way down. If Peter Lynch had kept buying Taco Bell all the way down to $1, he probably would have been happy. But hey, you're happy at $7 too when it gets acquired for $42. Look at the charts here. So there are significant events that happened or took place over the most recent period. And what I'm looking at here is 3 years. And you can see these stocks are pretty much the same, right? There's nothing to choose between them. And then wham, suddenly Oxy goes through the roof. One of the primary drivers for Oxy's massive spike was the buying of Berkshire Hathaway. To a degree, there were some sort of dips caused by ICANN exiting the position, but remember, ICANN still owns millions of warrants. But there's no doubt about it. When Berkshire Hathaway started purchasing Occidental shares on the open market, the stock spiked. And thanks to Berkshire Hathaway, we have a far better outsized performance than what we would have had if it were not for Berkshire Hathaway. The inverse is true on Petrobras, right? So this sort of divergence between the two lines on the chart, the blue one being Occidental, the black one being Petrobras, the events that happened here was firstly the run-up to the October election, and then, of course, the win by Lula. Whether it ultimately ends up being a win or not, I don't even know. For now, President Lula is the president of Brazil, and he'll appoint his own CEO for Petrobras soon enough. Once all the turmoil ends and subsides, or whatever happens. I have no standing or comment on that. But anyway, two major events happened. Berkshire Hathaway started buying Occidental, and as a result, we're all richer. And the Brazil elections caused Petrobras to take a hit. and the election of Lula caused it to take a hit even more. But for now, everything is kind of okay as you see it based on the charts. I'm going to look here at the fundamentals. I'm going to give you a brief overview. I'm not going to dwell on this for too long. This is a snapshot of the financial statements sort of overall. In other words, we're looking at balance sheet, income statement, and cash flow. There's not a lot of difference in terms of the balance sheet. There's not a lot of difference in terms of the revenue. You can see the sort of dip here on the balance sheet, the top one being Petrobras and the lower one being Occidental. 2020 was a momentous year. A lot of things happened from an income point of view. You can see everybody dipped in 2020 and then spiked again in 2021 because of the higher commodity prices. But here's a significant difference between the two. So if you ignore the balance sheet and the income statement for a second, I'll come back to them right now. From a cash flow point of view, Petrobras is just a solid green arrow up to the right, which is in the right direction. Cash flow for Occidental bounces around, and one of the reasons why is because they were doing significantly more structural balance sheet repair than Petrobras. If we look at the balance sheet on its own, once again, there's not a lot to see between the two. We're looking at Petrobras at the top, Occidental at the bottom. There are periods, 2019, you can look back and say, why were the cash and short-term investments so low for Petrobras in 2019? Conversely, you can say Occidental was collecting a whole lot of cash and then they acquired Anadarko, and of course the pandemic happened, so there are many ways that you can explain the narrative here. If you look at the total debt, it's sort of like a more or less flat line for Petrobras, and for Occidental, it spiked with the acquisition of Anadarko and then kind of dropped off again as they started doing balance sheet repair, and now with their long-term debt below $20 billion, it looks pretty good. Total equity, that's us, the shareholders, right? Once again, Petrobras, favorable to investors, generally just an up arrow to the right. And total equity for Occidental spiked in 2019 and then tanked in 2020, 2021 as they were suffering with that burden of very, very high debt. How about the income statement? So not a lot of stuff going on here for Petrobras. It's pretty much as I just explained. When you look at the fundamentals overall, the balance sheet, no surprises here. It's easy to explain things like the 2020 dip in operating income. It's easy to explain the total net income dip in 2020 because of the pandemic. It's also easy to explain the spikes in 2021 for either of these two companies because of the high commodity prices in 2021. And arguably, pretty much anyone in energy was doing well in 2021. Occidental's operating income, on the other hand, is a horrible picture. And the total net income picture is also quite horrible. Once again, we can explain and we can try and sort of talk over this negative operating income and negative net income for 2020 and blame the pandemic or do whatever you want to do in that regard. But there's no question that the Anadarko acquisition was an ill-timed acquisition by Occidental Petroleum, which actually turned out to be pretty good and probably will be significantly better longer term. How about cash flow? So many people talk about free cash flow all the time. This is an important metric for us as investors. And I'm looking here at Petrobras, over $10 billion in free cash flow for the quarter that ended September 30th. And that's one of the reasons why we are getting such a huge, fat, big dividend. I'm looking at a one-year chart here, and you can see that the free cash flow for Petrobras is pretty good, even though it dipped in the last quarter, where it was over 12 the previous quarter. $10 billion in free cash flow per quarter is phenomenal. That's pretty good. How about Occidental? Same period. So over $3 billion in the last quarter. I'm looking over a one-year period. We also saw the same spike as it was with Petrobras during the previous quarter. Occidental over $4 billion for the quarter, and now ended the last quarter, September 30th, at over $3 billion in free cash flow. Closing it off here, looking at tip ranks. They have Petrobras trading at approximately, well, the mean is sort of $13 or the average. On this particular chart here, I'm showing you only 4 analysts. So these are sell-side analysts. 3 say hold, 1 say sell. On the previous video that I made, I actually included 12 because I used my international investment portfolios analysis instead of my US one, which is more similar to Occidental, which is at the bottom here. 4 buys, 7 holds, and 1 sell. Petrobras was very similar. A lot of people of the 12 analysts that covered Petrobras on my international portfolio, about eight of them said hold out of 12 or 13, and the rest were outperformed. There was only one sell. So we have Oxy here at $75, and we have Petrobras at about $13. Now, remember at the beginning of the video, I explained the market cap and the share price and the PE ratio and all those things in collaboration with one another. What you need to do here in order to sort of equate them sort of on a one-on-one basis is multiply this by 6. And if you multiply 13 by 6, you're going to end up with $78. This is $75. So not a lot to choose between the two of them. But, you know, the difference here is that I'm already long in Occidental with several thousands of shares, and I've been buying Petrobras for less than $10. And that gives me an uptick of around 40-45% based on my cost basis from where it currently is trading. So guys, that in a nutshell is sort of my comparison between the two. Is one of them better than the other? I don't think so. Sometimes stocks go on sale and they are priced to buy, much like Occidental was when we were buying Occidental for $9, $10, $12 per share. Right now, you have an opportunity to potentially buy Petrobras, you know, for $9, $10, $12 per share. What about the political turmoil? Well, I don't know. You know, what I do know is Petrobras is a super major. It is super cheap. And a lot of bad things can happen, which can bring the stock down even more. So it's one of those things where previously I used to make videos quite frequently where I said, where's Oxy going next? $3 or $13? You know, so when it was trading at like $9 and it's crashing, where next? $3, 13. You could do the same for Petrobras right now. You can say, where's it going? It's at $9, $9 and a few pennies or whatever. Is it going to $5 or is it going to 15? Who knows, right? The fact of the matter is it's cheap. And in terms of my personal opinion right now, and remember, you must always do your own diligence and homework, which includes watching videos like this if you're interested. The difference between the two for me is simply that Occidental is a hold. I'm good with my position. My cost basis is just over $12. So the shares trading at like $60 is, you know, a 5x. If it goes back over $70, it's a 6x. There's no reason for me to do anything at all, except perhaps sell some Occidental to take some profit, which I can also use to offset some losses on something else. I have been making buys in the market. I've bought a significant tranche of Petrobras, and my cost base is $9.26. I have invested in Devon Energy, cost base is around $60. And also invested in Blackstone Minerals, and my cost basis is about $17. So that's where I'm at. You can tell me where you're at, and let's keep the conversation going so we can help to educate each other and make some money. On that note, this is Mr. Oxy signing off, saying thanks for watching. Take care. Bye-bye.